Welcome to Brave New Coin's quarterly review of the crypto and blockchain sector. Historically, the Bitcoin price has moved in 3 monthly cycles, and the purpose of this presentation is to review significant events in the previous quarter, and where possible, provide some insight into how these and upcoming events may impact sector performance in the months to come. Today's presenters are TechME Capital trader Josh Olszewicz, who gives an overall market update. Brave New Coin investment researcher Andrew Gillick speaking about Facebook's proposed Libra coin, and BNC market analyst Aditya, who takes a look at the state of stablecoins. And remember, none of the information in this presentation is a recommendation to buy or sell any asset. Brave New Coin accepts no liability for loss or damage as a result of reliance on any information presented here. Crypto assets are high risk. Please conduct your own due diligence before making any investment decisions. And now let's hear from Josh with his overall market update.
So we'll start off by talking about the total market cap of all the crypto coins and assets in existence. And in general, there's been a theme in crypto that the highs and lows are generally set within a quarter, and the trend for the quarter generally doesn't deviate, doesn't falter, doesn't adjust itself. It's pretty much a binary thing. And this goes back even pre-2017. The reasons for this aren't exactly apparent other than futures contracts are quarterly, and that's sort of how a lot of this derivatives market started on OKCoin. But even going forward, now that we have CME and Backed and various other options platforms as well, we still see this binary up or down trending market. So if we look at from Q2 to Q3, straight up, Q2 to Q3, was straight down. Throughout Q2, it was straight up. We can also put on the 50 and 200 day moving averages, which basically compare the past quarter year to the past year. And if the past quarter year is above the past year, generally there's a bullish sentiment or bullish momentum in the market. And likewise is true for the inverse if the past year's price is higher than the past 50 days. Currently, we're approaching a 50-200 EMA cross, also known as a golden cross, generally seen as a bullish indicator. Obviously, these crosses aren't perfect and can be lagging, as was the last bear cross, but in general, I'm leaning more bullish, especially in the wake of the potential bull cross here. Now, there's been a lot of talk about various indices or funds trying to decorrelate sort of the crypto movements. So you'll find that there's an alt fund or there's a BTC only fund, but in general, most of crypto correlates very highly. So it's hard to separate those gains in a basket is my conclusion based on the correlation matrix. There are certainly coins that correlate less with others. Stellar XLM is the least correlation with BTC among non-stable coins. And you can see that USDT has an interesting negative correlation with various coins as well. But the bottom line is most of this stuff generally moves together, which is why if one thing is bullish or bearish, the whole market tends to be bullish or bearish. Looking at BTC's quarterly price changes, in general, Q2 has always been extremely bullish, and Q4 has been the next bullish, whereas Q1 and Q3 have been less bullish than Q2, Q4. And using that narrative of the quarters tend to be binary, we're sort of already up 10% on this quarter. So the predictive narrative going forward would be this would be a positive quarter ending at the end of the year. Key upcoming events would be the Backed and CME BTC options. Both will likely be here by Q1 2020. I'll talk about Backed volumes in a few slides later. And the biggest thing of all for BTC would be the halving event in May 2020, where the block reward decreases by half and there's a pretty decent supply cut that occurs. This isn't an immediate response from price that we've seen in the past, but over time, as demand either stays the same or picks up, this supply shock kicks in and we see increased prices. It's really been that simple. And looking at the price chart with a pitchfork is what it's called, or just a channel, we can see that the median of this channel since 2015 has been that yellow line there, which is currently projecting an 11.5 price throughout this quarter. And even if we've jumped up above it in 2017, 2018, or got way down below the median line in early 2019, the fact that it's held this trend, this range for this long allows me to be confident that there's a decent shot at projecting or prognosticating a future price off of the expected rate of change. Looking at the backed volumes, it started off, the narrative was back's a failure, the PR was bad, the marketing was bad, no one's going to use this thing. And wouldn't you know it, the moment there's a movement in the market that's significant, we start to see volumes pick up, certainly lower than CME or most exchanges, but in general, this is definitely a step in the right direction. Obviously, you don't want to see volumes fall off to nothing when the market is moving broadly. So this just says people are able to access this, specifically institutional players who don't need to worry about custody, don't need to worry about a variety of other things, and are already sort of plugged into the ICE system, and for the US traders specifically, who tend to find that there's increasing regulatory pressure on them to either avoid crypto altogether, or it's just too much of a headache at this point for many people. And it's kind of hard to see, but if we compare the CME futures volumes with Deribit options volume and the backed futures volume, we tend to see spikes in volume around quarterly expirations, and this just goes to show you again that the backed volume is quite low in the grand scheme of things, at least at the moment, but it is definitely increasing. And yesterday they actually had their second highest volume day, despite being very little movement in BTC price at all. If we look at the CME futures contract dates, again, this quarterly or semi-annual narrative of binary up or down sort of has held true since inception. Another key thing that we're looking at as traders is the volatility surrounding these expiration dates and rollover dates. In general, they've been extremely volatile 2 days prior or a couple days prior to the rollover, or throughout the weekend of the rollover. The biggest examples of that are the previous two. We see that on October 23rd and September 25th were heavy down days for price, whether this is people hedging or unhedging on spot markets, which is affecting the market as a whole, is a different story, but that's certainly one possibility. So again, as traders, we pay special attention to what's going on these dates, surrounding these dates. They're sort of treated as high liquidity events or kill zones, or however you want to think about that, but everybody who's anybody's watching the price around that time. And again, this was BTC's third largest gain in history at 40% the other day, just to give you an idea of what that looked like. The previous two times occurred when BTC's price were mere cents, so the magnitude of that move was monumental in comparison to anything else really that's ever happened for BTC. There was also one large down day, I believe that was December 2012. So switching gears to ETH here, ETH's quarterly price changes are slightly different than BTC. Generally, if ETH has a down quarter, it's a minus 40% quarter. Nearly every time that ETH has had a down quarter, it's been around averaging that negative 40%. Q2 again has also been the most bullish for ETH, whereas Q4 has actually been the most bearish. Obviously, we don't have as many quarters to compare with ETH as we do BTC, but going forward, the narrative would be for Q4, you may not expect a miracle here. One thing that we are looking at is the Istanbul hard fork coming in November, which was originally scheduled for October, and now actually it's in December, so they keep pushing this back, moving it around. Generally, it's to help with scaling issues and transaction issues for smart contracts. They're also trying to launch a beginning phase of ETH 2.0, which is switching the consensus algorithm to proof of stake, migrating everything to proof of stake. This will take several years to do. And the other two big things are the progressive proof of work change, which is a consensus algorithm change that will drastically alter the current proof of work algorithm, allowing for GPUs and CPUs to be more profitable than ASICs. This is a bid from ETH to de-ASIC their chain. ASICs generally cause a concentration of power based on the amount of money you're able to sink into ASICs. So if places with cheap electricity and a high ability to concentrate power in one place, electricity, generally do very well. Places like China, places that have hydroelectric power or renewable energy that's cheap, like British Columbia in Canada, places like this do really well with mining. And the second thing, again, is this ongoing sharding, Casper scaling, ETH 2.0 stuff that's still in early development. ETH, unlike BTC, has been in this downward pitchfork for the past few years. It is sheepishly peaking above it, suggesting that there is a possible trend reversal imminently occurring on ETH right now. 160 is kind of the line in the sand. Below 160, and it gets really interesting. There's a project called MakerDAO where you can lock up your ETH and get a collateralized debt position, CDP loan basically, which has a liquidation price. So based on the current CDPs that are open, if we drop below 160, a lot of those begin to get liquidated, and then below 100 it gets even more interesting for ETH if price drops below that. So 160 is the big line in the sand for those CDP products. We can also project a bullish pitchfork on ETH in the very early stages, which is projecting a price of 260 to 320. If we use that same median line principle of this is where we think the rate of change of the trend will be going forward into December and January. Another thing with ETH, the narrative has always been that the ICO market has sort of driven price to the levels it has. So to track the ICO market over the past 2 years and see the entire market, just the bottom fall out, kind of speaks to the volume, the trade volumes on ETH itself. The trade volumes on ETH, if we just scroll back a chart here, have completely dropped off the table and are next to nothing. So if we were to see ICO sales increase again, which I don't expect to happen, that would certainly be bullish for ETH. But in general, this ETH ICO sales mirror ETH price very much in that unless we have another event that would trigger buying for ETH ICOs, it's going to be difficult to move price up other than with speculation. We can also look at the ETH treasuries the ETH ICO treasuries that have already occurred. So if we look at the withdrawals per quarter, Q4 2018 was the largest at nearly 800,000 ETH. And my general thoughts are if you're moving money out of the bank, you're not doing it for no reason. You're doing it to sell the ETH or to buy something else, to pay for employees, whatever overhead, or you're just panic selling because your treasury's getting devalued 40, 50%. So the less we see of that, the better for ETH price. I don't think it'll be a bullish driver alone, but it certainly won't add to the selling pressure. To see that there's 2 million ETH ICOs, 2 million ETH still withstanding in ICO treasuries is definitely like a black cloud hanging over everybody, because that is ETH that could just be sold at any time, and it's highly centralized in that only a few hundred ICOs hold this amount, and for any reason they could just sell it. Obviously, it's great in a bull market that when supply is locked up because there's less out there to be sold. But in a bear market, it's just like a margin cascade, long squeeze on anybody holding ETH. And these projects tend to dump pretty hard on their ICO treasuries. Looking at the stablecoins, a little bit comparison across everything. We see ETH, USDT leading basically the daily transactions and daily active addresses. Since then, over the past few days, the USDT has sort of migrated onto Tron, onto EOS, but it's definitely a dominant stablecoin in the market by a long shot when we compare the on-chain metrics. If you look at the total DEX volume and addresses, again, another narrative for ETH that is bullish would be the DeFi narrative that people are using ETH for things like trading or loans or anything that sucks supply out of circulation. And you can see that the DEX volume has sort of declined to next to nothing. Traders, daily active addresses, however you want to think about that, has also declined significantly. So there isn't a massive bullish divergence here in that we're not seeing a ramp of this stuff, and we're not seeing a ramp in price of ETH. One thing we are seeing a ramp of is the total value locked in these DeFi products, whether it be lending products like MakerDAO or derivative products like DYDX. People are continually becoming more comfortable with these products and seeing these products as a way that they can earn an interest, earn a dividend basically on their holdings.
The next presenter is brave new coin investment researcher Andrew Gillick, speaking about Facebook's proposed Libra coin.
Hello and welcome. My name is Andrew Gillick. I lead investment research at BNC. And today I'm going to be talking about Libra, Facebook's Libra project, and its implications for the crypto markets and also for the legacy markets. So it's been a big quarter for Libra, lots of news, both good and negative, but mainly negative for the project getting off the ground. It lost some of its main members in October, those being the payment partners Visa, MasterCard, Stripe, among others, which brought its membership down from 29 members to 21. That's 21 out of 100 members that they wish to fill in the Libra Association. So this has changed the distribution of the industry composition, and it's still mainly led by e-commerce and technology related fintech companies, and the rest of the partners at the moment are still holding tight. So it's yet to be seen whether the payment partners will come back later on in the project when there's more regulatory certainty, but for the moment they're staying put. So we've had a few meetings since in the third quarter. We've had Mark Zuckerberg last talking to the House of the Financial Services Committee in the end of October, and their argument is taking more of a geopolitical spin for the reasons that Libra should be allowed to proceed. And both David Marcus and Mark Zuckerberg have mentioned the digital yuan, China's upcoming digital central bank currency, as a potential game changer, both in the global markets and for the US dollar. So David Marcus went on television directly calling out the digital yuan as being a game changer for China, and that in future years, if there is no answer for the digital yuan, a large part of the world will be rewired and using a digital RMB rather than the US dollar. So they're bringing up a real threat to US dollar hegemony and reserve currency status. And it's been backed up by Mark Zuckerberg, who also said that China is moving to launch basically the same idea as Libra, a digital global currency, and not to rest on our laurels. So Libra, they're kind of proposing, is a de facto US dollar until the US government can come up with a similar technology for their own central bank digital currency. So it's quite an interesting narrative that is now emerging between Libra, China, and also Bitcoin being dragged into this whole global macro narrative. So in the last quarter, we saw around the Senate hearings, the Libra Senate hearings, we saw quite a bit of volatility, a big drop in price in Bitcoin. We're looking here at the BLX chart of Bitcoin, the global liquid indices, and just before the Senate, we see a big sharp down day on the BLX, followed quickly by a reversal. And in the last Finance Committee hearing with Mark Zuckerberg, we also saw a big down day on the day of the hearing, and then a huge, one of the biggest up days in Bitcoin's history, up nearly 30-40%. And that was the narrative of that move has been China's bullish comments about blockchain, and coming from President Xi Jinping, who said that blockchain is becoming a national imperative for the country, and a future technology that they've passed cryptography laws for, and something that they're really going to be focusing on in the future. So it's an interesting dynamic that we see negativity around Libra, and that is kind of being taken as a proxy for Bitcoin's adoption and Bitcoin's future. And then this bullish situation with China and blockchain kind of reversing the negativity. So whatever is bullish about Libra is also bullish about Bitcoin, it seems to be. So it's boiled down to Libra versus China in the mainstream narrative, and China's even spoken about accelerating the process of its digital yuan after it learnt of Libra's plans, and it had concerns that it would reinforce US dominance as it omits the digital yuan, or the RMB, from its basket, its reserve basket. So as we mentioned, it's become blockchain has become a strategic pillar for China in its plans for the future, and that is particularly so in the Belt and Road project, China's big multi-trillion-dollar project, which spans from China all the way over to Europe, and it's already underway. It's several years in the making, and they've already supplied huge amounts of money to projects along the Belt and Road Initiative. But the idea is, with a digital yuan, it would be much more, would have much more data and real-time oversight of the flows of money and the loans and perhaps credit risk and bubbles building in certain sectors, and it would give them a lot more control over their currency and over loans. So on to the next slide. Could Libra really stem the rise of Chinese purchasing power by omitting the RMB from its Libra basket? If Libra was to gain international adoption and recognition. Lately, well, in the past decade, we've seen China really take off in terms of GDP growth in global terms, and in terms of its purchasing power. It's already overtaken the US in terms of purchasing power, and it's set to almost equal the US in terms of global GDP percentage in the coming 10 years. So a big coup for China in 2018 was that its A shares, its stock market, was included in the MSCI World Index, and that weighting of Chinese A shares was quadrupled this year to 20% from 5%. And this was seen as a really big game changer for China, as previously China A shares and the currency has been omitted from the MSCI indices, which are followed by fund managers and portfolio managers to bench their performance against. And also a lot of the shares that are included in the MSCI World Indices are often included in many portfolios across the world. So this large allocation of A shares and RMB to the MSCI indices has it has meant that portfolio managers can no longer afford to omit the A shares from their portfolios, and by default also the RMB. So leaving the RMB out of a global basket of currencies is a bit of a slap in the face, and it also doesn't truly reflect the country's global prominence. The digital yuan and the Belt and Road would be a very interesting combination. It is part of China's push to create an alternative settlement currency to the US dollar, and it follows on from China issuing the Petro Yuan in 2018, which was the first non-US dollar settled oil contract, and something that was a direct affront to US sensitivities. The adoption of the Petro Yuan is not necessarily huge by any means, but it does point to the influence of China and what they're trying to do as far as expanding its monetary base and expanding its loans across the world and its use of its currency. And so far on the Belt and Road Initiative, some of the biggest Chinese banks, have put up trillions of dollars of funding and credit for infrastructure projects across the Belt and Road. The China Development Bank, nearly $1 trillion in loans already, and the Export-Import Bank of China has pledged again to fund thousands of projects across the project. And for these banks, it would be hugely influential and hugely important that they can see in real time where these loans are going and what the flow of money is. And it also offers the opportunity to program different traits into the currency, such as interest rates and incentives to spend and incentives to hold. So there's plenty of things that potentially China could do, the Chinese central bank could do with the digital yuan, and make it a lot more flexible to their monetary policy and also their fiscal policy. So it's another tool for them in perhaps devaluing the currency, and we've already seen China breaking its long time $7 peg against the US dollar, and that's been widely heralded by Trump and other US officials as currency manipulation, but it is something that we'll probably see more of in the future as we go into more trade wars and currency wars. So how could Libra affect the money markets? Libra is interesting in the sense that it'll be a buyer of US treasuries, and it could be potentially a large buyer of US treasuries if it gains widespread adoption, as these would be probably the safest assets that it would hold in its reserve. Over the past decade, we've seen a large amount of buyers of US treasuries who are traditionally foreign buyers who hold US debt in their reserves. They've actually been selling net sellers of US debt over the years, and they haven't been buying anything as much as they used to in treasury auctions. So we've seen a lot more pressure on US primary dealers to absorb a lot of the US debt that it issues to fund its deficit. And if foreign holders or foreign buyers aren't in the market as much as they used to, it adds to the inability of the US to actually find buyers in the market, and puts a lot more pressure on domestic buyers. So Libra could take some of the buying of US Treasury bills from primary dealers, and it could absorb some of the US debt. China is still the largest holder of US debt with $1 trillion in reserve, but there is also talk of potentially that being a risk to US monetary policy, as if China decided to sell a lot of its US debt on the market, it would push down the interest rate, push up interest rates when the US Fed is trying to actually push interest rates down. So so there's good reason to believe that Libra will also posit their influence in the treasury markets as another reason why US regulators should give it the go ahead. how could the crypto market in general benefit from Libra? Well, at the moment, the Libra Reserve is created in such a way that it will hold fiat currencies, the major fiat currencies, and some US debt. And this is what worries regulators the most, is that it's kind of crossing the line between national borders and real fiat currencies. So rather than to create a synthetic currency, that is. So rather than using fiat currencies, it could pivot to more of a crypto reserve basket, and this could include stablecoin versions of US dollars and euros and British pounds, while also including something like Bitcoin and even Ethereum. And that would be the best case scenario, possibly for the crypto market. It would expand the monetary base for stablecoins, and also provide a huge amount of buying demand for Bitcoin and Ethereum. And it could perhaps become a good barometer for the health of the crypto industry, or for some of the main currencies, similar to the MSCI indexes for other markets and other assets. So that would be something that is possible, but as I said, the best case scenario for crypto. So it's still very much in the air. The composition of the final composition of the Libra Association is yet to be decided, and we still have several months to go before their launch in proposed launch in 2020. Facebook has said that it would pull out of the association if regulators didn't give it the all clear. So they're still determined to create Libra in spite of Facebook's regulatory issues, and they had their first meeting in Geneva this October, and it looks like it's going ahead. So thank you for joining me on this slide deck, and I'll pass you over to our next speaker.
Our final presenter is BNC market analyst Aditya Das, who looks at the state of the stablecoins.
Hi everyone, I'm Aditya Das. I'm a market and research analyst at Brave New Coin, and I will be covering stablecoins, the performance of stablecoins over the last quarter for our Q3 report. Here we see the current market-leading stablecoins as assessed on Brave New Coin's market cap table. There are a few things to notice about the table that stand out. Firstly, it's the number of commodity-backed stablecoins on this list. We see that the top 4 assets are all commodity-backed, and specifically US dollar backed. This both suggests the preference of US dollars as the index or price reference tool. It makes sense since it is the world's most used currency and a popular reserve currency for many international trading economies. The other thing to notice in this table is the emergence of a number of new stablecoins released over the last 2 quarters as entrants into this table. Within the top 10, we see 2 exchange stablecoins, OK Link, which is the OKX stablecoin, and BUSD or Binance US Dollars, which is Binance's new US dollar stablecoin. I just want to spend a couple of minutes talking about Binance US dollars specifically, because it has a few unique infrastructure elements that sets it apart from other stablecoins. The first is that it was approved and it received regulatory approval from the New York Department of Financial Services. Something of a surprise considering Binance's sort of semi-checkered past and a sort of volatile relationship with regulators. So to receive a regulatory approval from the New York Department of Financial Services in a similar way to the approval received by the Gemini dollar of about a year earlier is a sign that, it's a blue tick mark and should send the right signals to investors that the Binance US dollar is, a stable, trustable asset. The other thing that's unique about it is that it has been issued in cooperation with Paxos, the team behind the Paxos standard, another stablecoin. One of the unique structures of this partnership is that Binance US dollars can be issued with Paxos digital stablecoins as the underlying. So if a trader would like to convert his Paxos to Binance USD, Binance would do that for them at all times, 1-for-1. This is very interesting because as opposed to most other stablecoins, which can only be redeemed or issued backed by physical US dollars, the fact that there's this fluid ability to redeem or create Binance US dollars with another digital stablecoin makes it somewhat different. It probably means that it increases the ease and speed at which things are issued, because Paxos can be collected over the internet with minimal KYC. So it suggests that Binance USDs are quite easy to issue. You would expect that means in terms of responding to market demand or how quickly they're issued in response to price movements, that Binance USD could do this quite quickly in the future. Yeah, but there are interesting connotations. For example, if Binance USD gets more popular than the Paxos standard, it may absorb the supply of Paxos, and there's some questions around scaling. If Binance gets too popular, what happens to Paxos dollars and how many Paxos dollars can be redeemed to issue new Binance US dollars? Moving on to the next slide. In the previous slide, we have a section on new upcoming stablecoins. So one is the neutral dollar. The other is the Binance GBP, a pound sterling stablecoin also issued by Binance. Binance have also said that they're going to be issuing a Binance Bitcoin, which is a Binance chain version of Bitcoin that is similar to wrapped Bitcoin on Ethereum. In terms of upcoming stablecoins, an interesting one would be Libra. As referenced by in earlier slides, Libra is always considered a stablecoin, has often been characterized as a stablecoin. This makes sense. Libra can likely be considered a stablecoin by definition. It is pegged to stable, established real-world assets with generally low historical volatility. And one of the advantages of the stablecoin to other users, it is designed to protect from volatility and is a stable unit of accounts. Initially, its value will be derived based on an index, making it similar to the special drawing rights coupon. So it will be made up of 50% US dollar, 18% euro, 14% Japanese yen, 7% pound sterling, and 7% Singaporean dollar. The inclusion of the Singaporean dollar is quite interesting, as it has been included by removing other Asian stablecoin choices like the Chinese yuan. However, Libra would be a very unique stablecoin project because unlike pretty much every other stablecoin that has ever existed, it is hosted on its own unique blockchain with its own consensus algorithm. It doesn't sit on top of another chain like Tether or USDC or DAI. It doesn't sit on top of a chain like Omni or Ethereum. It has its own chain, the Libra blockchain. The Libra blockchain has its own programming language and it seems possible to build dApps and applications on top of it. And Libra will have secondary utility apart from being a currency, and that will be used to pay for gas on the network and will have specific utility within the Libra blockchain. And there's other aspects to the Libra blockchain. There's a secondary token on top of it, which is a governance token. So it's kind of a grander, larger, bigger vision for a stablecoin. Another unique aspect of the Libra stablecoin is that it will likely be automatically integrated into popular applications like Facebook Messenger and WhatsApp. Because of the consortium that's setting it up, they've already committed that Libra will be used within their apps within Libra ecosystem, which includes companies like Facebook. This quarter has been interesting because we have seen strong growth from a number of leading stablecoins, particularly US dollar Tether and USDC. Generally, the pattern that you would expect to see or intuitively expect is that when there's a falling price of Bitcoin, there's a rise in the market cap and the usage of stablecoins because people seek a safe haven to wait out periods of downward volatility. So essentially, when the price is sliding quickly, when the price of volatile cryptocurrencies like Ethereum or BTC is sliding quickly, traders jump onto stable haven assets like Tether, wait out the period and re-enter markets once the prices are rising again. So Tethers provide, a kind of useful anchor for, cryptocurrency traders presently. And in this last quarter, we've seen the price of Bitcoin slide about 14%. And as you would expect, we've seen a rise in the usage of a number of stablecoins. So US dollar Tether has moved from the 8th position, from sitting on the 8th position on the 1st of July to up to the 5th. It has observed an 18% growth in market cap. And it now has a market cap of over $4 billion. USDC has had a very large move as well, US dollar center. It has moved from the 32nd position on Brave New Coin's market cap table to the 25th position as of 31st of October 2019. It has observed nearly 30% growth in market cap. Again, the growth and the ability to issue new supply in response to a growth in demand or a growth in demand for stable haven assets, it shows that, the supply has responded as required. The next chart shows the stability of USDT. The first thing to notice is that for much of the last 4 months, USDT has hovered slightly above the $1 level. This suggests that for a number of periods that there has excess demand for USDT. So essentially that the speed of issuance was not quick enough to satisfy the demand for these safe haven assets. So traders who bought during these periods had to buy it at a premium, which is not ideal. You would expect that going forward, if this sort of demand continues, the Tether printer might have to kind of start printing more quickly. And as we've seen with Tether being issued on Ethereum now and, being very successfully, they have sort of a cheaper, sort of more fluid platform to issue blockchains than they did using just purely Omni. The other interesting thing to observe is the kind of pretty sharp drop or temporary peg loss of Tether when it dropped to around 97 cents on the 27th of October. This was a period where there was a sharp uptick in demand for Bitcoin, and this was the day that Bitcoin rose about 40%. So it was an explosive period in the volatile cryptocurrency market. And generally what you would expect to see when this happens is money flowing out of stable assets and into the upward volatile assets to try and catch that wave. The market pretty quickly over the course of the next 24 hours quietened down, and we saw the price of Bitcoin sort of range and level out. And once that started happening, the kind of peg returned and people started to take profits out of Bitcoin and move them into Tether. So Tether kind of resumed its position back near the $1 level. Moving on, one of the surprising parts of Tether doing so well this quarter and at times having excess demand is that over the course of this quarter, it has received a couple of bouts of pretty severe FUD. The first emerged in early October when a lawsuit was levied against the Bitfinex exchange and a number of its affiliated entities, which includes Tether, accusing them of engaging in deceptive, anti-competitive and market manipulating practices, resulting in severe economic damages to the plaintiffs. The lawsuit, the size of the lawsuit is kind of the thing that stands out about it. It is approximately $1.7 trillion. This is more than the entire market cap of crypto. And for most kind of objective observers of this entire situation, this amount seems excessive. It seems kind of semi-grandstanding on the part of the plaintiffs. And it kind of gives a feeling that the lawsuit is sort of frivolous and Tether is being made an example of, or is a warning message to the rest. But it's difficult to imagine how the plaintiffs lost that much money because of Tether and Bitfinex's practices. The run-up from $1,000 to $20,000, as much as you can argue that it may have been influenced by the printing of Tether, the $1.7 trillion number is still excessive. Post this FUD, traders continued to use it Tether, for its issues, legal issues in the US, remains popular with Asian traders who lack fiat options to buy and sell crypto. Also, having a digital version of the US dollar, which is likely more stable than the domestic currencies they use, is really has a lot of utility for them. It's also, KYC-less or has minimal KYC, and is accessible in a bunch of different exchanges, has really good liquidity, is digital, is verifiable. So yeah, I mean, despite kind of this FUD and these large lawsuits, people seem committed to using Tether still. Yes, so this is how the price of Tether responded to the price of Bitcoin. So this is an interesting relationship to observe, because what you would expect to see based on that safe haven characteristic of US dollar Tether is spikes in volume during periods of volatility. And what's interesting on this graph is you can see kind of both characteristics of Tether. There are two volume spikes. The first happens on the 24th of September, and the second happens on the 26th of October. The former, so the volume spike on the 24th of September, was driven by an increase in demand for US dollar tethers. So essentially, the market or traders observed a falling price of Bitcoin and decided to temporarily swap over to US dollar tethers to protect their investments during this period of downward volatility by putting them into a stable asset that isn't influenced by negative sentiment in crypto markets. So yeah, I mean, the Bitcoin Tether relationship has been talked and discussed quite heavily, and we can see it right here happening in action with just money flowing out of BTC when its price is going down, and people's often their first choice is Tether because of its digital nature and its excellent liquidity. About a month later, on the 26th of October, we observe another price spike, another volume spike of Tether during a period of sharp BTC price movement, but this time it's the other way. This is BTC's price rising up very quickly and people taking money out of Tether and putting it into the upward volatile crypto markets, so shifting towards the trend, the upward market trend. So again, Tether does its job as you would expect it to do and kind of provides traders with the liquidity they need to buy BTC. So as we can see, generally Tether volumes, 24-hour trading volumes on exchanges are pretty responsive and reflexive and elastic to Bitcoin price movements. There's a kind of appears to be a clear correlation, and at a macro qualitative level, this is because of factors like the lack of solid fiat options for Asian traders to use. So they use things like Tether, which are easier to access and digital and have excellent liquidity and adoption.
That's it for Q3 2019. We hope this was helpful and of interest to you. Data referred to has been compiled by the Brave New Coin research team or sourced from Brave New Coin Market Data Services. Please join us again for future quarterly reviews. And if we can assist you with your own data and research needs, please reach out to us via the following contacts. Thanks for joining us today.